What's going on, everybody? Mark Fleetwood here. Welcome back to the Daily Grind Trader. Today, I'm back. I'm feeling refreshed, renewed, reinvigorated, all those good things. And I've also refined my favorite scalping method, the Williams Fractal method. I've refined it even further and made it better and a higher win rate. You're going to want to see this. Stay tuned, guys. I'm going to tell you all about it. All right, everybody, we know the drill. Let's get it out of the way first. I'm not a financial advisor. This is not financial advice. I simply share my analysis and share my strategies with you in hopes that you use it as you see fit. But remember, you manage your own money and you manage your own risk. With that being said, if you do like this video, please hit the like button, subscribe to the channel, all that good stuff. It is greatly appreciated. Now, we're going to hop right into the Bitcoin chart because yesterday Bitcoin gave a perfect example of why this method is so strong. Now, what I want to do first, I'm going to go on the hourly chart. And on the hourly chart, we're going to zoom back a little bit, and I'm going to hit this nifty little button to show my draws. And you will see I put in support and resistance lines all over the place. And I've got support and resistance here, and that is critical to refining this method, is adding in support and resistance and some other key features. Now, you'll see that I have the trend line up that recently broke, and then we've started a new trend line down. Now this hourly trend line this trend line on the hourly chart is not indicative of the trend line that we were trading or that we're going to trade. This is a broader trend. So think of scalping as, this is going to be a really corny analogy, and I'm sorry, but like Inception, it's like a dream within a dream. This is the trend line for the hourly chart. And if you go to the daily chart, there is no real trend line because on the daily, we're actually still stuck in the trading range. You go into the hourly, we've got this trend line. You go into the 5-minute chart, there's an even tighter trend line that was followed yesterday. And that is what we're trading on. Now, the 5-minute chart, that trend line will break and will likely break to the upside. And that'll be this 1-hour chart coming back to test the trend line. So the 5-minute trend line can break first, and then we'll retest the hourly, and then we might test the daily and see what happens. But I want to give you guys a good identifier that each trend line is going to get tighter and tighter and tighter as you tighten down your window. Remember that. You're going multi-layers deep. Now, as we go into the 5-minute chart, you'll see here that I've got this trend line coming down. So this long line here that just got touched here is the hourly chart, and then this is the trend line that happened yesterday. That was the trend that happened yesterday, and I'm going to go over the indicators that we're going to need because there aren't many. RSI, and we set up our RSI with no 70, 30 high low. We're just looking at a 50. So we are looking at 50 upper band, 50 lower band. Middle band can really just be whatever, but just a solid white line at 50, and that's all we use because we're just looking for our strength and our weakness and see where we're at on the RSI. We're not looking for overbought, we're not looking for oversold. Fractals, Williams Fractals, and you can search these if you search on indicators. Williams Fractals right there. And when I open this up, you'll see the arrows, the green above and the red below. I hate that. I flip it because I want my red above, because when I have a high fractal, I want to sell. So red to me is sell, green to me is buy. So I flip the fractals and I change the design to make them a little bit less jarring. So I'm going to go green for below, and I like to do little crosses and do red above, and again little crosses on the shape. Just to me, it's a little bit less jarring on the screen. And we're looking at the moving average ribbon, and I always use smooth moving average. So SMMA, SMMA, SMMA. The 200, you can turn it on, you can turn it off. It doesn't really matter for this, not as much as I thought it did. right now I'm only sticking to the 21 and the 50, but the 21 and the 50 are both crucial. So those are the indicators that we need. So 3 indicators, that's it. So this can be done with the free version of TradingView. Now, you see all these crosses, all these fractals, you are going to ignore 90% of them. And actually, I'm going to turn them off for now. There are multiple other indicators or multiple other triggers to enter a trade. And I'll show you why. And I'll show you just from my trading perspective today, or yesterday, excuse me. I started looking at charts. I started trading at 7:30 this morning. So this was the candle I entered on. And the first thing I noticed was when this price here rejected and started to go down, we had a hidden bearish divergence. RSI going up, price peaked lower. That's a hidden bearish. Now we hit a hidden bearish again, and then my trigger was hit to enter a trade. Now this is the trigger for here. We want a rejection off of the 21 moving average. Now it may not always be the 21. Sometimes the trend will be slightly less defined, and that might be the 50 that the trend reverses off of. But as of right now, it's the 21 that hit over and over and over again on this current trend. So the 21 rejected. Now with this rejection, I bought the very next candle, or I sold the very next candle, excuse me. So my sell order was in here. My stop loss was the top of this wick. So a 0.3% stop loss. And my take profit has to be at least a 2-to-1 reward to risk ratio. Right here I'm at 2.91, so almost 3-to-1. And I'm hitting this next support resistance line. So it's going to be a support line. So we're going to hit this. I'm going to assume that the price is going to bounce off of this. So I don't want to go below this, or at least I don't want to go too far below this. So it didn't take long. It only took about 40 minutes and hit a 3-to-1 reward to risk ratio. And you think that's less than 1% trade. You could do that 100 times and not make much money. But I'm doing this on futures with 20 times leverage. So my 0.3% stop loss is a 6% loss, and my 0.89% take profit is, let's call it a 9%, or a 0.9 is an 18% take profit. So yes, this trade in just under an hour was an 18% profit. Now you see we had a bearish divergence, a long wick rejection off the 21. And we turn the fractals back on. That fractal printed after this candle. Now, I'm still calling this the fractal method because you can use them, and you're technically always going to be trading a fractal. You're always going to be trading that. But you will understand that you're picking them up before they print. And some might say it's a little bit more risky, but when it prints off of a rejection, you don't have to worry about it. There's a ton of these that you could trade, and you could have made money on this one. You wouldn't have made money on this one. You would have got stop loss. This one you would have made money on. You wouldn't have got stop loss, but you would have been in a trade forever for a small profit. What I am doing with this is I am minimizing the total number of trades while maximizing the profit ratios of them, so that you win more often and you are overall risking less. So that being said, let's go to the next level. Here we have a rejection of the 21, but we're very close to our support resistance line. And we've been fighting it, and you don't know that this is going to be the candle that breaks it. You don't know that. So this was a no-go zone for me. Not yet anyway. This one, however, was a very much a go zone. And this was the biggest trade of the day. You see here, you have this high to a lower high with a bearish divergence, a hidden bearish divergence, excuse me. And the just got above, the RSI just got above 50. And what we've seen is every time we get to 50 or get above 50, we're breaking down. That is the trend right now, is that the trend is down. So 50 to 53, 54 on the RSI has been our max. So we know that we can trade off of that high, and that the price is going to come back down off of that high RSI. So we've got a rejection here, and we sell in off of this candle, and we have a 10-to-1 reward to risk ratio. This is literally the best reward to risk you can get. I mean, not the best, but on the scalps, you never get a 10-to-1. But we've got our stop loss right at this top of this wick. And if this wick gets contested again, we're going to go back to this SR range here. Our trend line will be broken. The 21 will be broken. So there's no point in going higher above this or even going up to this. At this point, the trend would be broke. And it only took about an hour to get a 2.16% trade. So that is a 43% trade on 20x leverage with only a 4% stop loss. That is a huge reward to risk. And what happens after that? We get this long wick and it rejects off the support resistance line. This becomes a strong support. It bounces off, and within 25 minutes later, we have another strong wick below the 21. We wick up, we price up to it, and we reject off. We enter another trade immediately. Now this one becomes a 2.98, so let's call it a 3-to-1 reward to risk ratio, because we are risking 0.38%. We are gaining 1.12. So again, this is a 22% win to an 8% loss, and it hits within an hour. You see I have this area drawn here, and this was I did after I stopped trading, because here we hit a bottom and we came up, and you see we're coming back and forth through the support resistance range. This is a no-go for me, because even with this fractal, you see actually we broke above the 21 and we didn't really wick off of every other one. We had a wick off. This one didn't. This one broke above it and held for 2 candles before coming back below. That's a sign that the trend is weakening. That is a sign that you're not getting that immediate break back down. Support resistance line held here, but it came back below. And again, we had a wick, but a wick back, and it stayed above the 21. And by this point, the 21 has crossed sideways through our trend line, and we've got our low here, and we've got a higher low here, and we've got a high and a lower high. So everything is compressing. This is becoming a consolidation range, and we actually had a double bottom right here. So this bottom and this bottom here, it's actually a bullish sign. This might become a scenario where once the 21 flips above the 50 and price breaks out of this range, this was our high of the consolidation range right here. Once price breaks above this, that will put the 21 above the 50, and we'll start doing the same thing, but on the long side. We'll start longing, and we'll long based on the price coming back to the 21 period moving average. Guys, it is that easy. But you need to know your support resistance ranges, and you need to know how to set up a trigger, how to understand, do you have something? Do you have a divergence or hidden divergence? Do you have a long wick rejection? Do you have enough room to get a proper reward to risk ratio on a trade so that you get big wins for small losses? Again, you could have taken this and you could have gotten a 2-to-1 or 3-to-1 here. You would have gotten it, but you're not getting all the way down to this here without holding longer than you want to for a scalp. And at this point, trading right above a support is too dangerous. This support broke back above, broke back below, broke back above, held here. If you were to enter this trade here and see it come down and buy right back up, back above this line, you're going to say to yourself, crap, this is the reversal. We're going to bounce back up. Now it didn't happen, but now here you're a lot more confident because you've got the bearish divergence and you've got a lot of room into your next support resistance range, and you can get a whole lot of profit there. So with that being said, guys, that's the video. I hope you enjoyed. I hope you got something from this, and maybe by the time this video gets published and you guys are watching it tomorrow morning, this might be positioned to take this whole strategy and start going long back the other way, because this was definitely a double bottom scenario here. I hope you enjoyed. As always, until next time, peace.